Everybody, welcome to Housing Bubble 2.0 News of the Week. I'm Randy Patrick. Thank you for watching. Sorry I did not put out a video Thursday or Friday this past week. I actually was tied up doing work. Yes, of all things, trying to do some work in this crazy real estate market. Sometimes that does take precedence instead of making videos. But either way, once again, lots happening in the real estate market. It's tough to keep up. Every day I'm amazed at what I'm reading online and just how much is flying around these days. But basically, I want to start off a little different here today. I'm not going to do as much statistical discussion. It's more sort of what's going on in the environment. So really, if we go back over a decade ago, so we'll say back to the last housing bubble, the then Federal Reserve Chairman, Ben Bernanke, whatever you pronounce his name, he was interviewed by CNN. And if you actually go on YouTube and you type in Ben Bernanke interview CNN, I think 2005, you might see a video on it, and it's about a minute and a half long, so watch it. It's kind of funny. But basically, he's being interviewed by the financial analysts at CNN, and basically he said, was asking about the housing bubble, and he didn't buy the premise of a housing bubble at that time, as we had never seen a decline in home prices on a nationwide basis. So he said that house prices would slow, stabilize, and that it wouldn't drive the economy from its path. And he was also very confident that the bank regulators would do the right thing in loan programs and underwriting, and control things, and that it's a localized problem and none of this would affect the national economy. He used one of those favorite words that we have here called frothy. So he said, yes, some markets appear to have froth or appearing frothy, but it's localized, not a national issue. Don't worry about things. So I look at that as a very interesting statement and somebody who was really in a form of denial, okay? Now, why am I talking about this? Well, because on Friday, NAR, which is a National Association of Realtors, their chief economist, Lawrence Yan, said not to believe those scary headlines about plunging home sales and stock prices. Well, if I'm not going to believe them, then what am I supposed to believe? I thought that was a very unusual statement from this guy. Now, of course, he's pushing back with the housing bubble because remember, he's pushing back and he said that home prices and sales were merely undergoing a mild adjustment in the data. And I kind of love this, and I think this is more than fabulous for what the market is bearing right now, and I have to laugh. And why is he saying this? Well, clearly here's the deal. So remember, NAR is the National Association of Realtors, and NAR has a membership base of what? 1.2 million people that pay NAR $99 every year to renew the membership, okay? So basically, he needs to keep their confidence up for sure, and he wants to encourage membership growth. And the reason why I say this is because more people become real estate agents in times of growth and in times of peak values. And the thought process is, well, why not become one? Because anybody can do it, and I might get in on this appreciating market and do a couple of sales, either make some extra money on the side as a side hustle, or guess what, this could be my new career. So that's kind of the concept people fly. And of course, real estate brokers, people who own and operate real estate brokerage firms, it doesn't really cost them anything to hire all these people come in because number one, they're independent contractors, so there's no cost out of their pocket. And number two, they know that they're worth maybe 1 or 2, 3 deals at the very least. So for them, they roll the dice, there's nothing out of pocket, no risk, etc. So we see this in an appreciating or appreciated markets. Now, he says more. So the housing market is on very firm ground. We should not be worried about price declines. Okay, well, I'm not worried about price declines either. I think it's not a worry situation for buyers and consumers out there. It's the fact that we don't want to pay that high value anymore. I don't want to pay somebody's equity or somebody's profit. I want to buy a property that's reasonably priced that I can live in happily and not sort of strain my own financial system and my own monthly economy to pay too much for a place to live. Now, more discussion here. Negative housing news could affect consumer behavior, causing a self-fulfilling prophecy. That's a little interesting. And if people view the housing market as having peaked and prices are going to go lower, people will postpone their decision to buy, and that could affect demand. Well, yeah, it has affected demand, and that's already happening. And funny, when people like these economists sometimes talk, you have to remember two things. They talk about maybe things that quite haven't happened yet, or they're not acknowledging what's happening in the moment because they don't want to. And also, clearly, he has a membership base and a business to protect. So we all understand that he's coming from a different perspective here, but it's obviously, it's very obvious and clear. So I look at this as classic bubble mentality. And why I say that? Because as a bubble grows and hits its stages of growth and peaking and eventually bursting, there's different ways how people perceive bubbles. And people like the way the bubble feels when it goes up. Why? Because it's interesting, because it's fun, because we can make money, or I should be making money, I should jump in. And it gives us a great sense of euphoria and calmness and success, and everything is good. So that's what goes on. It's like a drug. We like the feeling of this drug, and it's going to keep us going. And we don't want to lose that feeling and have some negative effects going on here. So having said that, what we do is we go into a denial situation, kind of like what this guy is saying right now, what Robert Yuan is saying. He's going, this is, not a bubble here, don't worry about it, just keep plodding along, things are all great. So he's trying to reassure his base that things are, 1.2 million real estate agents, that things are okay. He's trying to reassure the public that, hey, you know what, just you keep buying and selling, because home ownership's a good value for you. It's a good opportunity to put your money. It's a good way to earn value, earn appreciation, whatever you want to call it. So again, it's this whole denial thing. But it's funny because we tend to deny this as the bubble evolves, and usually in the later stages of the bubble. Why? Because we are afraid of actually calling the bubble out. We're afraid of the realization that it's coming to an end. We're afraid of the not knowing what's going to happen in the future and how it's going to unfold. So this is a human nature bubble theory 101 situation we're in right now. So, the last video I mentioned Robert Shiller, who of course is the Nobel Prize winning economist from Yale University, part of the creator of the Case-Shiller Housing Price Index. So again, he didn't think that that real estate would take a sharp turn at this time. Now, again, when when the news media reports on things, I like to jump on stuff and talk about it the minute I read it. So obviously that was the first interview or an excerpt from the interview, and as more time goes on, we get more information. So that was what was part of the headlines and part of the first, I guess you could say, pieces of the interviews that he was giving. Well, there's more to these interviews now. And he also said in the subsequent publications that it reminds him of 2006. So our market now reminds him of 2006, just before the bubble burst, of course, and that there could be a significant correction or bear market, but he is waiting and seeing now. So again, he's not coming out and saying this is what's going to happen, but I think if you read between the lines, or let's maybe interpret a little bit of what he's saying, there could be, I'm not calling it, but there could be something happening. I'm going to wait and see before I go on record as saying, there's going to be some problems coming in the future. Now, my perspective when I read this, okay, he's last video, he wasn't not a sharp turn yet at this moment. So again, right now, nothing. This, next series of interviews, it basically is now he sees there's a greater possibility of a correction or a bear market. So that's what's going on, with respect to housing from people who kind of know what they're saying. So this guy, he actually is not in denial. That's my point here. So the National Association of Real Estate Economists is in some form of denial, or is using that as his basis. Robert Shiller is not saying, hey, everything is great, we're going to see double-digit appreciation next year and life is going to be good, keep buying those homes. He's basically saying there could be a significant correction or bear market. And the word significant is significant as far as I'm concerned. Significant to me is not 5% or 10%. It's probably a little bit more than that. I'm probably talking 20 or 30s. That's just my guess personally. All right. So in other related news here, and just as funny, just to go along with the real estate agent and denial stuff, did you know that more and more people become real estate investors in a growth appreciating market as well too? That's obvious. That's clear. Where I live in the Tampa, Florida market, every couple of months we see what I call dog and pony shows. We basically see real estate investing groups come through town and they are, talking about, investing, fix and flipping, cash flow, whatever that may be, note buying. It's all great stuff, great to learn, but it's funny that in the appreciating markets, all these courses, all these gurus come out, and they're trying to get people involved. Now, funny enough, we call this the HGTV, the Home and Garden TV kind of generation now, because there's so many TV shows every evening, on the weekends. There's a ton of them on all the channels like HGTV, DIY, Bravo, A&E. All these channels have multiple real estate shows. Everything from your basic just buying, to listing, to looking for beachfront or lakefront properties, to actual rehabbing and flipping. Like the whole, we're talking teeny houses, Texas flip and move, flipping Vegas. We've got the mega mansion stuff. So the whole range is there. So I don't know if I told you this before, but a few weeks ago I thought, well, let's see how many of these homes are there. So I went to all the web pages for all those networks, and I went through all their shows they have listed. There was over 150 active real estate shows on the networks right now. There's way more if you go to their websites and look in some of the archives, the shows that happened 4 years ago, 5 years ago, whatever. So there's literally 150 plus shows you can watch during any given week that talk about real estate. So again, that's creating more and more investing opportunities and people who want to jump in and make money and do their best. Now, the reason why I mention that, because CoreLogic this past week had some reports that came out on home flipping and the flippers, okay? So they said flippers are fleeing the market, and the volume of homes being flipped has been dropping by double digits the past 3 consecutive months. So certainly seen a decline in the number of homes that are being flipped. And flipping returns, so typically profit margin, in August were the lowest level in 7 years. Now, that's something else, because we just hit some peaks earlier this year with flipping margin or profitability. So funny that changed very, very quickly, going from the highs to the lows in a matter of a few months. Now, yes, their profits are shrinking. Reason for that, because we see it all the time: higher acquisition costs, higher costs now for labor, higher costs for materials. It's harder to sell now. I can tell you that if you buy a property and do some basic rehab and expect to get top dollar competing with new home construction and other well taken care of and well rehabbed houses, you're not going to make the money, because buyers are demanding good product, good features, and high-level finishes for a high-level premium price. So you can't just expect that we're going to do a little bit of cosmetic rehab and expect to get premium price. It just doesn't work. So obviously it's costing more money, and subsequently that's actually taking a bit longer to flip the home. And when we take a look at what it usually takes, if you think about the process, it basically is a 6-month process. So it's actually averaging over 6 months for someone to actually flip a home. And if you think about it, it's going to take you, by the time you contract and close, by the time you do your rehab work, you put it on the market, you show it, you get a contract, and then that new buyer has to close, typically with a loan program. We're talking 5 to 6 months, if not more. So this is what's happening. And why I think this is actually kind of important, because down here locally, I have a small real estate investment club that I sort of put on and manage and try to help people with here. And the funny thing I see is that everybody comes to me with, hey, do you think this is a good deal? Or what do you think, what about this? Well, typically what happens is investors, new investors, wannabe investors, startup investors who want to get in the game, there's nothing wrong with that, typically are going to wholesalers or other sources to get their properties and reviewing the opportunity. They're not going direct to seller. And by doing so, they're actually paying a markup. So the property that I'm going to buy from someone who's already got under contract certainly will have a markup there. So they're paying more for the property, and the ARV, so ARV, for those of you that don't know, stands for after repair value. The ARV is usually quite inflated. Now, ARV, if you look at after repair value, and after repair value is a forward-looking potential value that we think the property will be worth once we're done all our rehab work. Well, don't forget that that value is based on past 30, 60, 90 days worth of comparables. So if you're looking at a property right now, your wholesaler or the person you're trying to assign it to or sell it to you is basically saying, the property is going to be worth this down the road based on what's just happened now. That's going to be inflated. What the person who's trying to sell you the property is not taking into consideration is that we're in a declining market, all right? And that today's ARV 6 months down from the road is not going to be that. And that's where we're going to see blood on the beaches, is because people are going to jump in going, I want to get a deal. Again, this denial about the bubble. The markets appreciate, everything's good. I'm not listening to what's going on out there. I want to get it, and I get it done. Oh, ARV is going to be here. I'm going to make this margin. That's great. This is where people get caught, and this is where things happen, and it always turns out bad, and we saw it before, and we're seeing it again. All right. Now, also related news, mortgage rates were up this week, over 5% on average for ideal buyers. So this is a 7-year high. Again, lower volume of people asking for purchase mortgages as well. Clearly, we've probably seen a lot of this in the past news this week. California is taking a real beating on home prices and sales. To note, this week, San Diego in particular is down, collapsing 17.5% to its lowest level in 11 years, and that lowest level is just before the financial crisis hit. So there you go. So what comes up does come down, and parts of California are really taking it on the chin now. We've not. And to further that, so my perspective on this is, we've seen appreciation, we're seeing slowdowns, we're seeing flippers making less money, we're seeing a lot of significant. We're not talking 2 or 3% here, people. This is 17.5% difference in sales. That's a significant number. So what's going to happen when people get when sellers get anxious, if their property's in the market longer and they think they can't sell it, or they want to get something out of it, they're going to do cash out refi. So my last comment here is the fact that cash out refis are finally picking up the pace again. This shouldn't be a surprise to anybody. They have not been this prevalent since the last housing crisis. So again, see the similarities here. So a lot of the things that are happening right now that have happened the past month, 2 months, are exactly the same factors that contributed to the previous housing bubble, collapse, correction, crisis, whatever you want to call it. It's happening again. So when you think about the future, don't buy into that bubble mentality that, hey, everything is great, everything's going to keep on going because it feels good. It's time to be realistic. So clearly nobody has a crystal ball, but we do have the ability to look back in time at a previous boom and bust cycle and see how that played out. So that's what I'm doing. I looked at it, I experienced it, I was in it, I benefited, I benefited some, lost some, whatever it was, but I fully experienced what went on, and I can look at what's happening here and say, hey, you know what? Now we know what's going on, and this is a great opportunity for people who want to participate, being educated and having their eyes wide open and expecting things to change now, as opposed to being shocked and surprised and losing out money and losing their equity and losing their home. So that's the difference, I think, between now and over a decade ago. Is we have the model in front of us. Why not learn from it, take advantage of it, either earn money or buy your dream home at a much better price than you would be paying for it today. All right, I'm Randy Patrick. Again, thanks once again for the subscribership, for the views, the comments. I'm trying to make a little more effort to go through and read comments and reply back, and in the future taking some of the things that you guys are saying and incorporating those into some of our videos. But again, I'm trying to be a little better on the YouTube thing here, but primary focus is real estate, guys. So anyway, once again, appreciate everybody, and we look forward to another video in a few days. Thank you.